Hi, Jonathan York, Bay Financial Partners, looking at investment markets. They say a week is a long time in politics, but certainly that can apply to the markets as well. Latest sort of Brexit polls coming through are showing now a majority for the Leave camp, around by sort of 10 odd percentage points. But that's sort of quite interesting when you look at the odds that are being offered by the bookmakers. They don't seem to quite reflect this. They sort of moved a little bit, but they're still showing quite a clear majority for the Stay camp. Now, obviously, if the UK did leave the Eurozone, it could have some pretty dire implications initially for the UK economy. Certainly the currency will be hit pretty hard, and a lot of uncertainty, which financial markets don't like. The argument goes for the Leave camp is that if the UK was to leave, they can pretty easily just renegotiate these trade agreements they've got. I don't think it's going to be quite as simple as that. I think certainly there'll be quite a bit of uncertainty and potentially quite a bit of damage to the UK economy over the next sort of 12 to 18 months. Also in the US as well, the latest non-farm payrolls were pretty weak, around 35,000. You compare that to around the 12-month average, which is around 200,000. That's sort of quite a weak number. Now, whether that's just a rogue number coming out, it's going to be very interesting to see. I think what it does do is put the Fed certainly on hold for June, as they're really going to wait firstly for the Brexit referendum, but also as well waiting to see the latest data coming out on the jobs front that will come out in early July. If that's another weak number, then really you do push back potentially rate hikes toward the end of the year, if not early part of 2017. Potential for these rate hikes to be pushed back, clearly still shows the Reserve banks are in a sort of accommodative stance. And that's all good news for equities, as stock markets really sort of push up towards sort of record highs, and a little bit of M&A activity as well. Microsoft this morning announced the purchase of LinkedIn for around 26 billion US. Oil is still holding in as well. It's sort of just above that sort of $50, and it's interesting now that a lot of the sort of shale producers out of the US that were sitting on the sidelines and have sort of closed down their wells and sort of ceased work on a number of projects are starting to come back into the market. A number of wells came back online over the last sort of couple of weeks, and it's just going to be interesting now to see whether this increased supply forces down price, or whether it's absorbed by the market. Certainly there was some feelings that the market would get back towards sort of equilibrium around the sort of third quarter of this year. Now, sort of political unrest and the fires in Canada have sort of maybe just exaggerated that and just sort of moved it forward a little bit. And potentially now you're in a situation where the world is starting to consume more oil that's being produced now on a daily basis. Reserve Bank of Australia, latest sort of comments, appear to be that maybe they're sort of done cutting now. Certainly the Australian economy is pushing along at a pretty reasonable rate, with rates at 175 there. That's probably sort of low enough, and maybe they're just sort of sitting on hold now, waiting to see how all these recent sort of cuts sort of pan through and sort of filter through the economy. Reserve Bank of New Zealand also on hold. Latest sort of comments coming out was sort of wait and see. Certainly the Auckland housing market has had a pretty big impact on that decision. If you look at it, house prices still pushing on a pretty reasonable rate. And that's starting to sort of push down the country now, as sort of Auckland has sell up and sort of move down and push house prices up in the rest of the sort of North Island and South. But also as well, the New Zealand economy is actually in a pretty reasonable state. It's growing at a reasonable rate. Inflation starting just to sort of increase a little bit, really on the back of the sort of oil increase, and also pretty tight labour markets as well. Coming towards the end of KiwiSaver year end as well, make sure your contributions are up to date, and if possible, up to that maximum level in order for you to qualify for the maximum tax credit going into your account. If you're unclear on that, call us on 0800 867 323. A couple of recent fixed issue offers in New Zealand closed early through demand. As discussed here before, there are some other options out there if you're looking for income, and if you're interested in discussing these options, call us on 0800 867 323, or go to the website www.bayfinancialpartners.co.nz for lots of interesting articles. We look forward to speaking to you soon.